Hey, what YouTubers? Ken here from the Dyslexic Investor, and we're going to look at a very simple chart. We're just going to jump right into it. We're going to try to look at when to buy and when to sell. This is going to be more particular on like short-term trades. So if you're just buying SPY, the QQQs, the RUT, whatever, like this is going to be any using the things that I've learned to kind of become a better trader. I'm doing air quotes to understanding things. So this is gonna be a really quick video. We're looking at the S&P 500 here. Again, this is the 500 companies within the United States, and they're broken up into different like 10 categories. So this gives you a great bird's eye view of what's going on in the stock market. We're still actually currently open. The bell's going to probably close here in 25 minutes. So we're just going to jump in here. So we're going to look at things. So you can kind of see here on my screen, the yellow line is the boldest line. So that is actually the 21 EMA, or exponential moving average. It's not a simple moving average. It's slightly different. And that is basically, when you hear the word reversion to the mean, that's what a lot of people talk about. There's different numbers. Sometimes some people use the 30, some people use the 25, some people use the 18. It's different. It's depending on the way you trade, you're going to play around with it. But you can see here. So let's just go back here for the past like month since April. We were flying above the 21, again above the mean, meaning it's a bullish continuation. Once it touches it, and it's continuously bullish, I would want to buy that. I'm not too big fan of what's going on. Is that this is a sign? I'm having it on a very short leash. I'm not buying everything I have and putting my account into everything in this. You do a starter position. Okay, so you put a starter position in right about here, at that 21. You can put alerts out. They have all this kind of fancy stuff now you can do. You put an alert out for that area if you want to buy, and then of course if it breaks below it, it's a sign of selling. But you see the other moving averages; they're still slightly stacked, and the 5 didn't cross the 8. Which is kind of a good sign as well that day. So you could have nice potential pop on that moving. But then you see 2 days later that it didn't close above the 21. It did close above the 21, not below. This day it closed below the 21, which could indicate for more downside. And you did see that here. Again, closed before the 21, it didn't breach above it, more downside, more downside. Closed above the 21, more upside, more upside, more upside. So we are today here on what's today? May. Oh my God, it's not May. It's June 28th here. Okay, nothing's crossing yet. We have China deal with the G20 coming this weekend. Who knows what's going to happen there? But we are getting closer to the yellow line again, and we'll be moving from there and seeing what happened. Let's do another example. Let's look at the noodles, aka the QQQ. Let's do basically the same time period. Let's go back here. So this is closing out the year right here. So this is, let's do more like this. There we go. So this is September all the way to like December, Christmas time here. See here, we closed below the 21, and we never, each time we got close, you can just re-add your puts, re-add shorts. We closed above it, which was very bullish, but it continued to go downwards after that. Again, closed, kind of went up a little bit, but these long extended candles could indicate potentially more buying, but again, it could be anything from bad news to economic data and things like that. And it didn't really break out in a green way, so it closed on the red, and it continued and went lower. It couldn't break above 21, and then from that point everyone just gave up and it just came crashing down. Again, slowly building back up, things like that. So you would add starter positions in around that area for the move up. Again, same here, close above the 21, pop, didn't close below 21, got really close. These lines cross the 5 and the 8, showing more downward movement, and then the 8 and the 5 cross below the 21, that can be more downward movement. It's not just using the certain numbers for the averages, for your simple moving averages, for your exponential moving averages. It's just having a system that you can stick with, and instead of just trying to feel it out, is this you just have a thought process of XYZ happens, I do this. If ABC happens, I do this. So just having a plan, and if you want more details on the planning process, I can do a more in-depth video on that. Again, guys, thank you so much for watching. This is the Dyslexic Investor. Catch you guys on the flip side. Peace.